This video will show you how to place trades on the FXCM Trading Station II. If you hover your mouse over the buy price on the advanced dealing rates, the cursor changes the shape into a crosshair. This is letting you know that you can now pull a trigger and place a trade. In this example, let's place a buy trade on the currency pair Euro-US dollar. To do that, hover your mouse and click to open a new trade. Next, the Create a Market Order dialog box will appear. This box will allow you to select the symbol for the currency pair, select if you want to buy or sell this currency pair, and you can use the little radio dial buttons to swap between a buy and a sell, just like this. You can also alter the amount of the currency you want to trade. So this dialog box lets you decide what currency, whether you're buying or selling, and how many of the currency you want to trade. This is an important aspect of placing a trade. Let's put a trade on our brand new demonstration or practice account. Click OK and the trade will execute and the open position will be displayed down in the open position tab part of the screen, down here. You can see all aspects of the trade, including the ticket number, the account, the symbol and the amount, and whether the trade is a buy or a sell. We can also see the open price that we have selected the trade at when we placed that trade on the market. After you clicked OK, you may have heard a noise in your speakers if they were on. That means the order is executed. That noise will also accompany a sell trade if you decide to close this trade out. Now once your trade is opened, you will need to add a stop loss. This is to prevent you losing more than a specified amount. Without the stop loss, the trade would remain open until closed manually. And if the market moved against the trade, the result could be very large. For this lesson, we will use the example of a minus 20 pip stop loss, which means the most we can lose on this trade is 20 pips. Click on the empty space below the column here under the header Stop. When we click here, we can see that the Stop Limit Order dialog box will open up. We can see here now by clicking simply on In Pips, we can adjust the price up and down of the stop loss to allow us to secure our minus 20 pip stop, so our maximum risk on the trade is 20 pips. We can see now here in our Open Positions tab underneath the stop loss there is a number. That is a number, it is an order in the market that will actually close our trade out when the price hits this point. This is a safety net in the market. Okay, so we've put a stop loss on. We can also attach a target or limit order to a trade, which will set a profit target. Now in this example, we're going to put the profit target at that same 20 pip amount. If we click on the empty space below the column header Limit, as you can see here, the Stop Limit Order dialog box will open. If we tick Limit in pips and change the limit value to 20 as shown here, in normal market conditions this trade can now only make 20 pips or only lose 20 pips. We can let this trade run and over time either the stop loss or the limit would get hit and the trade would close out. So we can't lose any more or make any more than those projected amounts.